Hello, and thank you to the Board of Directors for giving us the opportunity to address you this morning. Today, we will be discussing our current business model and the future direction of our company, Hubspot. To begin, we'll start with the current problems we're confronting and our customer situation analysis. Afterwards, we'll discuss a different perspective on our marketing mix. Following that will be our 3 alternatives, and then we will announce our decision. At that point, we'll go over our current time frame regarding our implementation. Lastly, we'll go over our budget and contingency plans if we don't receive the results we're expecting. Since we founded our company 5 years ago, we've achieved more than we thought possible. Currently, we're at a crossroads with our business and we're facing several questions. We have a diverse pool of customers that helped us get to where we are now. We have the opportunity to scale up our business and determine what is our business model and who do we focus our business on. We hope to further expand into our market. Our brand is synonymous with inbound marketing, our bread and butter. However, we recognize that several aspects of outbound marketing could be a catalyst for future growth. Should we incorporate outbound marketing into our strategy? Lastly, how do we further develop our product and maximize our profitability? What decisions can we make to increase our value to prospective customers and improve our product portfolio? Keep in mind, our main objective moving forward is to accelerate growth and increase profitability. In order to do so, we must address our market segment, pricing model, and overall marketing strategy. Our customers are a mixed variety that differ in model and size. Similar to other industries, we work with business-to-business customers and business-to-customer models. Both differ in their experience with Web 2.0, while business-to-business customers need more attention and value inbound marketing to get concrete leads. Business-to-customers have high-performing websites and tend to have strong social media presences that rely on analytics. Diving deep into our customer profiles, 73% of our customers are small businesses compared to the medium-sized businesses that make up 27% of our customer base. Since small businesses have significantly less employees, they tend to not have a team of marketing professionals. For that reason, they value our ability to provide them valuable leads. Also, small business customers tend to be easier to acquire but have a lower return on investment. Medium-sized businesses have a higher return on investment but are harder and more costly to acquire. Since they are concerned with running programs and customer traffic, they value HubSpot's ability to give in-depth analytics and reports. Analyzing our customer behavior gives us an insight into how much their usage varies. Most of our customers, 55%, are engaged and use our products often, within 50 weeks in a year. Looking at our monthly churn rates, business-to-customer customers are our highest at 6% compared to our business-to-business customers at 3.3%. Our lowest rate is our CMS, Content Management System customers at 2.1%. This gives us an idea on how many customers we're able to keep on a monthly basis. Our market potential tells us an important narrative. Given our pool is made up mostly of small and medium businesses, we have a lot of potential with very small businesses, as they make up 45% of our market. This gives us the potential to grow, and we are excited to determine what will be our next step.
Okay, we'd like to now give you an overview of the current competitive landscape within the Web 2.0 space that HubSpot is in. What you see on this slide is known as the customer funnel. This funnel represents the steps that are taken as individuals go from early prospects to qualified leads to customers and final sales. The funnel also summarizes the overall goal of companies who provide inbounding marketing products and services. So within this customer funnel, there are several direct competitors to HubSpot who are helping companies create traffic, analyze leads, and then convert them to sales. You'll notice that at the bottom of the funnel is Salesforce.com, who dominates that space and helps convert prospects to sales. The upper region is more densely populated. That's where HubSpot's products and services currently focus. So this is a more in-depth look at the companies who make up our competition and the products they offer within the customer funnel. So there are some who are very specialized, while others offer a broader product portfolio. You'll notice in particular that Marketo also offers a software solution, whereas Web Position helps improve search engine rankings, and that is something that HubSpot offers both of those products. So you can see with so many players in this space, defining a specific customer segment and product line can really help distinguish yourself from the competition. Now, it is important to take into account the political, economical, social, and technological environments. There are currently no cumbersome government regulations, which is to our advantage. The ongoing recession since 2008 has made companies more cautious. And socially, customers are growing tired of the traditional outbound marketing tactics. They're not as responsive to cold calls and such. And finally, integrating technology into marketing is increasing. We can dive deeper into some of the specific trends in Web 2.0. So first of all, we see that lead generation from inbound marketing is much more cost effective, at 5 to 7 times less than outbound marketing. Now, this cost savings has led to many companies increasing their budgets for inbound marketing, specifically in the business-to-business markets. On average, we're seeing that 37% of marketing budgets are being allocated to inbound versus 30% to outbound. And finally, we'd like to point out that the lower costs involved with inbound marketing has leveled the playing field for small businesses. Where before, larger companies with deeper pockets had an advantage in outbound marketing, smaller businesses now can generate more leads per dollar with inbound marketing. So all of these trends are very encouraging and are to HubSpot's advantage. In terms of the product lifecycle, as you know, we've recently celebrated our 1,000th customer. And despite that great success, we are still very much within the growth phase. We are only viewing 50% of all leads, and 31% of all leads are given that primary score and rated a high priority. So there is continued growth to be obtained as we look to refine our market segment and increase profitability. Now, in order to clearly see where we stand as a business, we laid out the strengths, weaknesses, opportunities, and threats for HubSpot. So first of all, we are a pioneer in Web 2.0 and have been doing inbound marketing since 2008, which has given us high credibility, and this has led to many awards, which we are very proud of, and these awards legitimize us even further. Our weaknesses are found in the fragmented product line and very diverse customer segmentation that we are trying to serve currently. Now, this has made it difficult to standardize processes across each market, which in turn has led to long sales cycles of 30 to 45 days on average, from initial contact to the final sale. Now, we see a lot of opportunity with a large potential market, as highlighted earlier, and specifically in small to medium space, as well as in improving our lead scoring system and product lines. And finally, increasing competition poses a threat, as we saw earlier, as well as the steep learning curve that comes with Web 2.0, particularly to smaller companies, and the products and services within Web 2.0. Now, as one final step to viewing our current standing, we wanted to call out our existing marketing mix. First of all, we offer a complete inbound marketing system that includes the CMS, which enables HubSpot to host a company's website in our system. We offer 2 pricing structures: the HubSpot Owner, which is $250 a month, and the HubSpot Market at $500 a month. One is a simplified version, while the other offers more sophisticated inbound marketing tools. And both of those have a $500 upfront cost. We currently promote our products solely through inbound marketing, and we take this very seriously as a foundational pillar in what we believe in. And lastly, it is through consulting reps and Web 2.0 tools and applications that we sell our product.
In order to evaluate our alternatives, we'll be looking at 3 different parameters, which would be our market segmentation, our pricing strategy, and if we require outbound marketing methods or not. In order to evaluate our first alternative, which is to target medium-sized companies, we'll be increasing our upfront cost so that we can essentially create this premium bundle of services by amalgamating different services together within our CMS platform. And also, we won't be incorporating any kind of outbound marketing services to target them. For the second alternative, we'll be looking at small size B2B companies, and we'll be lowering the entry point so that we can derive a higher value out of them in long term by giving them price incentives so that they stick with us longer. And also, we won't be incorporating any kind of outbound strategy for them as well. And for the third recommendation, we'll be targeting both the small size as well as the medium sized businesses within the B2C realm. And again, we'll increase the upfront costs. However, in this particular strategy, we'll be incorporating a bit of outbound as well as a bit of inbound to create a much more impactful strategy for this target segment. Now, moving on and having a deeper dive in the first option, which is to serve our medium-sized companies, we'll be objectively evaluating this option by going into the pros and cons of this particular strategy. And the first pro is obviously it's a sophisticated customer segment. This segment is a medium-sized business. It's not a small-sized company, and they essentially know what their product is. They have given a lot of time into R&D and product management, etc., and they know the audience that they are serving. Hence, they know that that an inbound marketing system will be much more effective than an outbound marketing system, and hence we don't need to spend a lot of time in terms of educating them. However, there are certain cons and certain impediments in this journey, and we need to be mindful of that as well. And the first impediment is that they have a longer selling cycle. Since they are so educated in the market, it becomes essentially difficult for us to rope them in quickly, and hence they have a longer cycle. And the other thing is that they already have a dedicated in-house marketing team, which again creates a lot more friction in terms of acquiring them as customers. Now, moving on to the second option that we have, which is to focus on small size B2B companies. We'll again look into the pros and cons of each one of them. And first one is we can definitely derive a greater amount of value out of this particular segment, which is the small size B2B segment. This is because this is a small size company. This is relatively a newer company, and it hasn't really figured out its way within the market. And HubSpot can definitely step in and help them understand why an inbound strategy might be much more better than an outbound strategy in the long term in order to grow for them. However, in terms of cons, we need to be mindful of this, that there's a lack of experience within this particular segment, and also they offer a higher churn rate. What this means is that we won't be able to derive a lot of customer lifetime value out of them because their customer life cycle will be much shorter than a medium-sized business. Moving on to the third option, we have our B2C companies, and we'll be targeting both medium-sized as well as small-sized companies. Again, looking into the pros and cons in order to objectively evaluate whether this is a good option for us or not. First of all, the biggest pro is that they are much more sophisticated and willing to pay more so that we can charge them a premium and we can essentially derive a lot more value out of this segment. However, the biggest con is that we might essentially diffuse our segmentation because we are targeting both small and medium-sized businesses and casting a wider net throughout this whole system. Now, in terms of evaluating a decision and objectively understanding and after contemplating as to which particular recommendation and alternative would be the best for us, we want to go ahead with a small size B2B company. And there are certain benefits of this and certain things that we need to be mindful of. First of all, this particular sector defines 73% of our total portfolio. And we can keep deriving benefit out of this because we have already capitalized on this segment before. And we can keep the momentum going and keep deriving benefit out of this. The second thing is that it's easier to convert within the existing templates. We can essentially use the tools that we have without putting in a lot of efforts in terms of R&D and in terms of product management in order to target these companies. And also the next thing is that outbound marketing will not be pursued. Now, moving on to the last thing, which is adjusting the pricing model so that we can make this subtle tweaks to make this a much more attractive offering for these companies. What we can do is that we can tweak our subscription model in a way that we can create permutations and combinations within these different pricing segments so that we can target our audience in a much better way. And also we can create a much more watered down economic version of the CMS system that we already offer so that we already have this premium version in place, and also in order to make it a much better and much effective offering and much more enticing offering to this B2B small size segment, we can offer them a much more economic thing as well. And also The last thing I'd like to go over is that we can provide them with renewal incentives and also turnkey pricing.
Thank you, Devesh. Now, Devesh just did a great job walking us through the alternatives and explaining the rationale for why we made the decision that we did. And we're certainly confident that our decision is the right one for HubSpot, but it would be disingenuous for us to pretend that there aren't any risks here. Any change carries with it some inherent amount of risk. So the risks of our plan are as follows. First, by choosing to focus on small businesses only, we do expose ourselves to a certain amount of macroeconomic risk, because small businesses are disproportionately affected by larger market forces, such as recessions or even perhaps a global pandemic. Second, our strategy aims to decrease churn by expanding our subscription models, incentivizing customers to make longer commitments, and converting customers to CMS. But we may find that our customers don't have the priorities that we think they should have, and we may not actually be able to decrease our churn rate. And finally, although we believe that by expanding our product offerings to include both a premium and an economy version of our core products, we'll be able to attract more customers, we may just find that we've created a product that doesn't actually have a demand. But we still need to move forward with our decision regardless. After all, there are reasons that we didn't choose the other alternatives available to us. We could have chosen to focus just on medium-sized businesses, but we decided not to do this because these businesses comprise a smaller portion of the market and don't provide the same opportunity for growth acceleration. Medium-sized businesses also have a higher acquisition cost and are less likely to convert to our CMS. And finally, they already have established marketing systems in place, so there's not as much that we can contribute there. We also had the option of focusing just on B2Cs, but this also wasn't a great choice for us because it would have forced us to continue to split our already limited resources. And B2Cs are actually the market segment that has the highest churn rate for us. Again, they also are unlikely to convert to our CMS. Now, in addition to having a strong rationale for the decision that we decided to pursue, we also came up with a detailed implementation plan. As you can see, we've been quite ambitious with our plan. We're going to be spending the next 2 months on market research, followed by 3 months for product development and development of our pricing strategies, and then 2 months for deployment. We also came up with a budget for our plan. We estimate that it will cost us about $500,000. Now, this makes up a little more than 3% of last year's revenues, which we believe is very reasonable. And of course, we have contingencies to address the risks that we identified earlier. If we find ourselves struggling financially because of disproportionate market pressures on small businesses, we can always widen our customer base once again. We can also repackage our current product offerings and increase our upfront pricing to mitigate our financial risk. And if we find that we're not able to decrease our churn, we can continue to revise our pricing, including revising our subscription options and perhaps even offering a la carte options for the first time. We're confident that with these contingencies in place, we're ready to move forward with our decision to focus on small B2Bs, to expand our product offerings, to adjust our pricing to include more subscription options, and of course, as always, to continue to stay true to our brand, which emphasizes inbound marketing only. Thank you so much for your attention. We welcome your questions.